Shidim Shari. Morning, Tuesday, June 18th, 2024. Let's talk about the health insurers today. Some sector that I have not mentioned in a while. Can't remember. I'm sure I mentioned some of them here and there, but not all together in a long while. But before that, today compared to yesterday is a very heavy econ data day. Yesterday there was literally nothing. Uh, Nothing, absolutely nothing. Today you have retail sales. That's very important. And then you have industrial production, manufacturing production, business inventory. I'm just mention some of them, but there's a lot more. And on top of that, you have, let's see, uh, one, two, three, four, five Fed giving different speeches all over the place. Okay, so they are out in force today. The econ data, of course, is 8:30 in the morning through 9:15. So the majority of the econ data is before the market open, and then all the Fed are speaking from 10 a.m. all the way to 4 p.m. Goodness gracious, six Fed is out in 6 different locations speaking. So the market will pay attention to what they are saying. On top of that, there are, for those that are not familiar with the way the country issuing printing money, um, auctions on a daily basis, Monday through Friday. There are treasury notes, treasury bills, and treasury bonds being auctioned on any given day. Sometimes you just have bills, sometimes you have notes, and sometimes you have bonds. If you don't know what the differences between bonds, uh, bills, and notes, they are duration. All right. So when you're talking about 10 years, 20 years, 30 years, that's bonds. Okay. And today at 1 p.m., if you want to buy 20-year treasury bonds, you can. I'm not sure how many billions are being issued, but real quickly, from Monday to Friday, government, the Fed, Yellen, the Treasury, issue, sell, auction off bonds in order to pay for many things. One of them is, of course, rolling over other, you know, treasuries that mature. It's always, constant, various different, treasuries that mature that they issue 3 months ago, 6 months ago, 9 months ago, a year ago, whatever. Okay, all different duration. So, they have to issue bond in order to pay for the bond that are maturing, roll them over. On top of that, they need to issue bonds to pay for money sent to Ukraine. It's so insane that I think the interest payment on all the treasury that we are paying right now is like $1 trillion a year. I could be completely wrong, but the high interest rate is crushing the Fed because it has been a nightmare for the Fed to try. Well, Yellen, the Treasury, are inflating, okay, because they are going against everything that the Fed are doing because the Fed are trying to stop inflation But Yellen and the Treasury is the one that are printing money in order to pay for money sent to Ukraine, for giving student debt. I can go on a 24-hour rant on the nonsense that causing inflation to be sticky, but regardless, the market, the equity market will peg on what's going on with the treasury bond. So if you pay attention to the way the equity market work, a lot of time there are movement on TLT at 1 p.m. because that's when the auction closes. Okay, that's when the bond auction closes and yields are determined. So today, the reason why I said it's important at 1 o'clock also is because it's a 20-year auction. So depend on how the market receive and bid on the treasuries that Yellen are selling, that yield will determine where TLT can be or should be. Okay, so keep that in mind. All right, done with all the yapping. So let's go right to ELV. ELV used for those that pay attention to what I do here. ELV was a staple on a daily, weekly basis last year, and then it fell out of favor. And then for the past, let's go 3 years. You see this? There was a time where ELV was the dog, the big dog. And then last year, it was not the big dog. And then since mid of last year, it become the dog again. Okay? I don't talk about it, but no doubt I kept my eye on it. If you want to pay attention and look for entry point, let me change that. That white line is lining up, has been lining up with the 200 daily moving average. How often did you see that? How often do you see a 200-day moving average that line up with a key trend line that show its support for the past almost 6 months? That's remarkable. Okay, that's remarkable. You don't see that, but that show you how steady ELV has been. The only way that the 200-day can line up like that is because it has been a steady upward movement. So that being said, would I buy here? No. Would I buy down here? Yeah. If there's a correction, yes. If you want to sell put, long dated puts, go out 3 months, 6 months, do something, 475, 450. Okay, way down there. I'm sure there's juice, but you're talking about 3 months out, 6 months out. But for now, it's a no touch for me. It's too hot, but it's still the big dog. UNH, not so, because of the, of course, exposure to higher Medicare. But no doubt, it was a buy down here, right? If you can weather the pain in the mid 400 down to 436, right? Would I buy here? Also another no. Would I buy down here? Yes. To me, if you want to buy UNH 460, mid 460s to below, is worth the risk. Let me show you the 3-year chart on this. Okay, it has been steady. It's such a wide range. Okay, this stock trade in a very wide range. It's like $100 range, 558 down to 458 ish, right? So it's a big range. So you see this white line? Yeah. If that white line, anywhere near that white line, yeah. Would I sell put spread? Yeah. Where? 450, 450, 430, something like that. Okay. You get the 200 weekly moving average coming up. If it tests that, yeah, if it come down and test the white line at the mid 460s, yeah, I would start to be interested in that. Okay, Humana, the ugliest of the four that I talked about today. It came off. Okay, this right here, this is the weekly chart. Okay, this has been the ugliest of the ugliest, but it will heal. Okay, look, this is COVID right here, right? COVID right here. It came down. Okay, it came down to an area where not the COVID low, but a level of prior resistance. It's very, like I said, it's a minor area. I wouldn't call it uh, the big stop, but for whatever reason, it did stop. Okay, now if it fall out again for whatever reason, then yeah, then you can come down and test this COVID low and ref low here. Okay, so yeah, can it get crazy and come down to 230-ish? Yeah, that's how nasty it can be. But for now, it came down to a level where it was a support area back here or resistant back here, and it bounced. Now, would I chase it here? No. I do have some. I do have some. But for me right now, um, if you get anywhere near here, okay, if you're looking to sell 380, that's where I'm aiming for. Okay, first of all, it closed the gap, right? It filled this gap here, and it has checked back and bounced and hold. Okay, so the good news is all the regret holders that we have here, at least for now. Okay, all the regret holders that we have all before and through here are being absorbed, right? Because look, a lot of people that hold on to it here, all through here, kick themselves once they move down to the next level, right? And now they are saying, oh, thank God we got a chance to sell at 350, 360. Thank God we didn't have to absorb $50 of loss. Okay, so that's where the stock is going sideways, and it will go sideways until those regret holders are gone, and then up to 382 we go. Okay, so as far as the upside, 382 is the next area of regret holders jumping out, and then of course you get that 400. Okay, the gap fill. So they have two level of major resistance. Okay, barring a significant shift in fundamental, and there will be a shift. There will be. Okay, these things take, I would say, a year to lap the fundamental. Right now, we are 2 quarters into the bad fundamental, right? It's because you got the 1 quarter with bad news, higher Medicare utilization, less profit, another quarter of bad news, and there will be two more, okay, before we make that move where they lap and the comparison will be better and increased premium will overtake. Okay, yeah, give it time. It will see 500 again, and for those that are willing to buy some and hold on, a year from now you can get yourself a nice looking 60% gain. Last of the bunch, CI is probably the second best looking one outside of ELV. I've been nibbling at 331 ish. I have, it's getting bigger. Okay, because you're talking, whenever you have like a 3-digit stock, even owning like 20 share is a big chunk. Okay? Um, Anything 50 shares or more, you start talking about, even 30 shares, 40 shares, you're talking five figures. So it's getting big. But I like it here. Okay, it's definitely a zone. Let me color it in. It's definitely a zone of support. Okay, it's been that zone of support, but I wouldn't add any more. I think I reached a point where I'm pretty okay with what I have. Uh, but yeah, I like CI. I've been adding CI since this point here. For the past month, I have been adding CI at 331, as low as 330. I think I had some order at 329 that didn't trigger. I'm leaving those order there in case you get to 329 for whatever silly reason. But the 200 daily moving average is rising to where the gap up is. Okay, so it's passing that point now. It was there. Now it's past that point. So if you want to sell put and be safe, do something like a 305, 3, 305, 295, going out 3 to 6 months, way down there. Because if something go wrong, it likely will leap past the safety protection, fill the gap. Okay, so if you squimish, do 300, 280, way down there. Okay, because but I like CI. I think owning CI is not a bad idea. In fact, I think CI, Humana, all four are likely to be worth buying on the dip. I'm not saying buy now. Okay, I think the only one that um, I would buy now would be Humana on weakness. CI, UNH, ELV need to be a lot weaker for me to buy. But the reason why I like this sector more right now, before I go, is if there is a recession and a downturn in the economy in the next 3 to 6 to 9 months, if there is, okay, these companies will likely hold up earning better than most because, well, they don't have a big global presence. It's mainly a U.S. kind of business. Okay, mainly a big U.S. kind of business, so it's isolated from the weakness all around the world. And insurance is one of those last things that people will give up. It's not like some for a lot of people, if you have your job, you have your insurance, and the company will keep forking out the higher premium to give you the benefits. So the earning will hold up, okay, more than many other sectors of the economy. So that's the reason why they tend to be a sector. Healthcare, especially health insurance, is a sector that tend to hold up better than other health related sectors. You would want to own, say, med device if there's a recession. People are not gonna go and get surgery on their knees and ankles and all that stuff on hips. Yeah, there will be time where those things will get cut back. So now, as far as heart surgery, like Edwards Science, that's a different story. Okay, if you need a transplant, heart surgery procedure done to stay alive, you get it done no matter what econ situation is. But as far as ankles, knees, hips, eh, I'm not sure if those are enough priority if the economy is bad. Okay, that's it. Enough rambling for today. Keep your eyes on econ.